One of the biggest market events of the year just unfolded exactly on April 8th. For anyone who's been checking out our live streams over the past few weeks, we've been dropping the exact date, April 8th, over and over again. So one of two things is going on. Either one, we're onto something. Two, Trump is inside our VIP group. Three, Trump is using the same information we are to time market dynamics. Because undoubtedly, first he delays the ceasefire, and then it becomes one of the biggest trading events in Wall Street. So much oil longed, so much stock market action. Sean Ryan was covering this just recently, expressing his concerns of manipulation. But this is just the tip of the rabbit hole, guys. This goes way, way deeper. Of course, the catalyst was they unleashed the FOMC minutes. Inside it, we're going to unpack so much information about what's coming for alt season this year. But looking at what happened last year, right around this April 8th date, the reason why it's so important is because the Treasury General account gets filled from all of our tax money. This puts a ton of liquidity stress on the banking system in general and can cause downside in the stock market. We all know Trump doesn't like that. Look at what happened last year with Russia and Ukraine. It was March 11th and then April 23rd. And guess what the journalists were saying, just like Sean Ryan's saying right now? They're saying, yo, that ceasefire, totally fake. It's a giant bread and puppet show so Trump can manipulate the market. And based on our information, we completely agree. Here's the deep end. Remember how we kept talking about April 8th was going to be the day? We were anticipating that would be when they refilled the Treasury General account, and obviously, so did Trump and his advisors. The central bank is decentralized from the government, so there's no way that Scott Bessent or any of Trump's guys could know. Look at what they just put inside the document released yesterday. They're talking about the Treasury General account refill. And it reads, in April, tax payments were expected to cause wide swings in the Treasury General account reserves. Reserves are expected to hit their trough in late April. And about that point, they'll be equal to where they were at the end of last year. Aside from that, the reserves are around $3 trillion, and they go on to explain how they might have printed just a bit of excess capital. So this wild shock that we saw in last year's market, surrounded by fake ceasefire events, is anticipated to unfold later this month. And that's just the first piece of information we extracted from this FOMC document. This particular piece of paper is absolutely filled with juicy information, including, are the Feds going to cut rates because of oil? In the event the inflation keeps stacking up and the Fed correlates that to high oil prices, are they going to cut? Guess what, ladies and gentlemen? It's in writing right now. That's just the tip of the iceberg. We're going to do a deep dive into that. It's a pleasure. Of course, members inside VIP, they're going to get the whole book report. There's a lot of our group members who are already masters of macroeconomic trading, and they understand, yeah, I'm not spending the whole afternoon reading this dry, mustardy document, combing through details. I'm going to pay Jesse to go through it and also correlate it with the best swing trade possible. Remember that river breakout? Talking about how the central bank was going to begin their treasury bill repurchases that triggered the river flywheel, river being a DeFi project supported by those T-bills, obviously going to rocket to the upside. Inside our VIP group, this FOMC minutes had a clear-cut pick. There's a clear-cut trade for members only alongside my book report that took me hours and hours to do yesterday, covering every single point, explaining it in layman's terms. So if you're a plumber or an electrician, a real estate guy, you don't really get into banking terminology, boom. You got it broken down for you and connected to crypto. And then I'm going to go ahead and give you the quote and the paragraph where we got that from, as well as historic examples of, well, whenever they're talking about Treasury General Account liquidity, just for an example, that's going to get bearish when the reserves are in crisis, etc. So we are looking at a very unique setup right now. Not only do we have point number one, which is late April. Remember in the last documents we were pulling up, it was just saying April. Now they're getting more specific. Obviously, Trump was on the exact same page that all of our VIP members are, because he set up the ceasefire to take place on April 8th. Looking back to last year, that's the exact same date that the central bank used, and therefore they set up other fake ceasefires to create kind of this bullish tailwind to support the market while the Treasury General Account refill is going on. It stresses the banking system. So they want a touch of bullish news happening in the background just to make sure nothing collapses. They don't get any bank runs, anything like that. They did it last year, right around the same dates. It's completely wild. While that late April event is happening, there's even more bearish headwinds that aren't going to have a long-term negative impact, but it's just going to be a quick flash crash, a quick pop to the liquidity. Remember how we were talking about the Bank of Japan carry trade and how we want to be on our toes for that scenario? The Bank of Japan carry trades have obviously been detrimental for all of crypto, specifically Kaspa. It actually topped at the Bank of Japan event. Of course, they buy a ton of US debt. They also buy all of their oil from Iran, 80% of it, which is a unique concept here because as the Strait of Gibraltar is shut down, Trump's opening the doors for Japan and all these other countries to start purchasing US oil, which is going to help us push our treasury bill, our T-bills, and our bonds. A lot of these foreign countries, they're always talking about, oh, well, we're going to do BRICS. We're going to stop using US dollar. We have the biggest and best military around. It's very hard for us not to bully our way onto the table. And Trump might have ulterior motives going on, starting to sell our oil. Remember, he just picked up a huge amount of oil in Venezuela. The United States has a ton. Greenland has a ton of precious minerals, and Canada has a lot of oil as well. So we're open for business now, and this has got a deeper element. So back to the Bank of Japan carry trade. Let me pull it up for you so you can read the Fed's writing, and then we'll explain how this is going to affect crypto. With the elevated energy prices causing global inflationary pressures, several central banks previously expected by market participants to either remain on hold or ease policy further. So they're talking about central banks around the world. There's the Bank of Japan, Bank of England, Bank of Australia. They also hike their rates, lower their rates, just like the US does. And what they're saying in sentence number one is these guys are on deck to cut their rates. Not anymore. That sentence is saying that was old news. Now we've got a different story. We're now expecting them to hike rates modestly this year. So it was a big maybe for a Bank of Japan carry trade taking place. Now that's looking like it's going to happen. Remember, This is a dual catalyst now because we're going to have the Treasury General Account refilling in late April. And that puts a lot of stress on the altcoin market, very connected with global liquidity through the market maker means and so on. So there's two catalysts that are going to create that flash crash V-shaped dip that we saw. Let's get a total 3 chart up last April. It's not going to be a portfolio altering move, yet it is an opportunity to pick things up at a discount rate right here. Boom. That's on April 8th. That's also an FOMC minutes, the event that just happened. Therefore, it's pretty clear that Trump and his colleagues, when they delayed the ceasefire event, were hoping that the Fed would come in and say, yep, we've already refilled the Treasury General Account, and now we're getting ready to push that liquidity back into the U.S. economy, which is very bullish for altcoins. They're very sensitive to liquidity in both directions. So when there's a crisis, liquidity's thin, they're collecting taxes in the banking system, the repo market's stressed out, crypto has some bearish elements. But when the Treasury General Account is putting liquidity back in the system, that's bullish in turn. So what we're looking at is a delayed upside mechanic with high volatility that for the broader retail trading public, they're not going to watch the old guy on television talk about the central bank policy. This is boring. It's so boring. People hire me to do it for them. They're going to watch the beautiful blonde on the news explain how markets are adjusting because of the conflict, which based on our trading journal looks like they're arranging the ceasefire events to line up with the central bank, which is the real network that runs our country and the economy. They create the booms and they create the busts. It's really in their hands and it's completely decentralized. A lot of Satoshi's vision built around the central bank. We were able to find a unique trade in this minutes. The previous one on February 18th, it was very dull. It didn't give us a specific project or sector with upside. This one did. And you can see upside in almost every sector from AI. There was that minutes in blue. When they're blue, it means it's after a dot plot vote. We got a nice rally in the altcoin market after that minutes. There was a lot of bullish information there. So we do have a swing trade for VIP members. And of course, we're clipping the exact wording like we just went here. And I've got 2 more really good points that I want to share with everyone in this video. Just like we're showing, hey, all these banks, including Bank of Japan and the Treasury General Account, we've got a big event heading in for late April. So if you still got any cash or you're looking for an entry, start saving up because late April, we should get some volatility and this will be an opening for a lot of projects. That's super good. Let's take a look at some comments and then we're going to jump into the other 2 points, which are crucial and really zoom out and give this altcoin season a whole new time window. What's good, guys? All-time high. Yes, when we unpack the next point inside the FOMC minutes, we're going to be able to correlate it with broader market upside and when projects are going to get ready to start making new all-time highs. And I'm talking about the broader ecosystem all the way to AVAX, Solana, not these niche projects that we like to catch like River, BankerBot, how we caught Tau at the bottom side. That's a nuanced skill set. And all of those trades came directly from insight in this document. I've got a link to it in the description. And of course, in our VIP group, we go ahead and scrape all the keywords out and give you a copy of all the keywords that we're looking for. When you've got the minutes open, you just hold Control and you press G, and then it'll let you search for any keywords. So you can look for reserves, Treasury General, April, inflation, artificial intelligence, which we'll get into in a second. No comment there. He only talks up one project and then just goes around and talking down all the rest. Kind of insane guy. We don't punch down on this channel. So our original thesis was the buying event, there would be a market dip. This market dip is the reserve trout that we're seeing right here. Now, in the previous document, all it said was reserves will be low in April. Looking into last year when they were doing all these ceasefires, that giant wick down on the total 3, showing you it right here, it was connected to the minutes. It was on April 8th. Based on all the information available, it seems like Trump and his colleagues also believed that the downside would be in on April 8th because they released this bullish information looking for the rally when the Treasury General Account pushes liquidity back. It seems like the decentralized central bank has thrown us a curveball. And it looks like late April. And it's not just from TGA. It's not just from the government collecting our tax money. It's also from the Bank of Japan and all these other banks. They're looking like they're going to hike rates. So on April 28th, we got an FOMC meeting. So does Japan. So does England. So does Australia. And rate hikes are on the table right now. Their economies are a zillion times weaker than ours. And we can see the Bank of Japan hike, the first one they ever did, that was Caspa's all-time high, guys. Pretty wild stuff. And then again, a peak here. And if we've used these time and time again, here we've used them to take profit. Show's over. We got to wait for downside to unfold. We're going to be on the sidelines with cash. It's a huge part of being a successful trader, keeping a cash position. And even intermediate to advanced traders make this mistake. We're always trying to go all in all the time, looking for that edge. Cash is effectively a short on the market. And obviously we can't go long all the time. With these niche plays like River, Banker Bot ripping to the upside. Yeah, these are awesome, but obviously River started out at like a 30 million market cap when we were buying it, ramped all the way up to $1 billion. This isn't something that you'd want to do an all-in position for. Late April. We want to wait and hear from the Bank of Japan on April 28th, and we'll see it. You'll see it in the charts. This will be correlated with news. We use insights from the old gray guys that are on Bloomberg that are like, they speak really monotone, not fun to watch. The beautiful blonde will get in and kind of disguise what they're talking about as Trump's actions in the Middle East and all of these human right narratives, etc. We know what's really going on. Trump's just vamping up this bread and puppet to mask this central bank action. And they did it last year, which is wild. If you guys want to see that and you're already in VIP, just type in conflict or overseas. You can pull this up. It's a post we made last year. Totally wild. We get the goods. We do get the goods. Yes, thank you. Thank you for the vote of confidence. Right now, crypto social media is at an all-time low, which is even a better time to buy. I remember when Caspa was peaking in price, we're around this Bank of Japan hike. Everybody was psyched about it. The videos were blowing up to the upside. We were the only group that shorted here at the September rate hike. They were doing the inscriptions. Everybody thought it was long, but because of this liquidity dynamic, remember, Caspa was able to push through and rally while the rest of altcoins were consolidating and selling off. So Render, very similar price action to Caspa, sold off. It had that big ramp off in 2023, 2024, and then sold off until September. Caspa just ramped right through it, kept driving. And now that we can see the Bank of Japan connection, it's very clear that from that brief quantitative easing we got back here, this money was leveraged and just kept the price stable. This is a store of value project deeply connected with quantitative easing and the Fed's balance sheet. We're going to get, it's never, great question, by the way, but remember, all of my answers are never my opinion. I'm going to show you what the Fed says. So let's get into that one right now. That's the global banking one. Okay. I actually didn't pull this one up. I can just type it in because I remember the keyword. Look at this. This was on page, oh, this is on page 1. The near-term federal fund path implied by future prices shifted higher on net over the period, with a rate cut not fully priced in until December. Because of the oil inflation, and there's a part 2 to this, guys, so stay with me for a few minutes here, because there's another quote from the FOMC minutes that links directly to this that you don't want to miss. So they've already priced in the rate cut isn't happening until December. Boom. Right in the FOMC minutes. Looking back at that May 15th trend line, remember on the total 3, we were having a great time until Powell came out. And this is another reason why hiring on a macro sidekick that can connect this to crypto is so key. Nobody picked up this signal except for, you know who did? Meet Kevin. He's like a giant YouTuber, covers macros. Here's the thing. When Meet Kevin picked up on the May 15th event, he thought it was bullish. I'm not sure if he was talking about real estate or stocks, but it was clearly bearish. And we were able to unload our bag on the day. And this is not just bearish for Caspa. It's bearish for Tau, Render. Every single crypto crashed and burned on May 15th. And since then, it's just been having massive resistance. It's right there. It's as clear as day. That's Tau, one of the most bullish recent projects, May 15th. And that's all because the Fed said, hey, guys, tariff inflation is still way too high. We're not having an altcoin season right now, put into layman's terms. So we caught that and then distributed that information to our VIP group with historical talking points showing how high impact it was. Powell was threatening to change policy, do all this stuff. So it caused immediate downside. It wasn't until this FOMC minutes when they explained, hey, things are starting to look better. What we're going to do is change the quantitative tightening. We're going to officially end it, not in Q1, but right in Q4 of this year. So that was massively bullish. This happens right then. Now back here, it was always the meetings that would cause rockets to the upside. Looking at the Caspa chart, when we add all these FOMC meetings, it's like each one of these orange emojis, Caspa just rockets to the upside, right? Those are FOMC meetings. As Powell stopped talking less and less about liquidity from the money printing from lockdowns, that started getting put in the minutes more. That's the high impact information to crypto. So the markets are flying blind on the crypto catalysts until the minutes come out. And this minutes just came out. So this information is brand new, it's cutting edge, and I really pity anyone who isn't taking a look at the minutes, because as we can see, the Fed is now delaying the rate cuts until December. And we got even more information regarding that, because there's kind of a wild card inside of this FOMC minutes. Oh yeah, this is where it gets good. This is where we can get an advanced bull run. I'm going to explain to you how the macroeconomic data is going to have to play out in order to press this button. In particular, most participants raise the concern that protracted conflict in the Middle East could lead to a further softening in labor conditions, which will warrant additional rate cuts. Boom. Right there. What they're saying officially. In the event this conflict in the Middle East continues rolling on, Powell's going to step up and they're going to cut rates. In fact, Powell is about to step out of office. We're just waiting on Congress to vote the new guy in. Powell's going to move out, and then the new Fed chair is going to have the reins, and he might decide to start cutting right away. Jumping into our VIP group, I'll show you the exact data that needs to stack up in order for the Fed to say, okay, things have gotten out of control. It's time to start cutting rates. First of all, what they want to see is your GDP needs to start dropping down. Second, the labor market needs to start showing any forms of softness. Now, the Fed will look to front run labor market weakness because once the labor market starts crashing and you have high inflation, this is the worst scenario the Fed can get themselves into because they can't use their tools to get themselves out of it, because then they're just going to create more inflation. So it's like a flywheel effect of bad news. So they will get on top of this before labor market data, before the GDP starts to really bleed. Now, they might see some early signs like wages or adjustments in new hires. What we're definitely going to see first is the difference between core and headline CPI. So actually tomorrow, we've got a big print going on. We have the CPI inflation. Now, this has been running fairly bullish for crypto recently because the producers haven't been passing through their inflation to consumers. They're just absorbing it to stay competitive or for whatever reasons. They don't really know. But CPI hasn't been high. Now, there's two different types of CPI inflation. You've got your core, which is excluding oil and foods, excuse me. And then you've got your headline, which is including oil prices, food prices. On this print, the Fed's really going to focus in on their core, taking oil out, because they want to make sure they're making progress still from COVID. But in the event that the headline, it's called headline inflation, it's for CPI, PPI, and PCE. That's including oil and everything oil affects, like food. Obviously, they got to drive the food to you. So when oil prices go up, so do food. It's like a hand in a glove. In the event we can get 2 or 3 headline inflation prints that are getting high, that's a direct sign that labor market's about to start dropping, and so does GDP. But remember, they don't want to wait until it gets that bad, because if they wait until it gets that bad, it's already over with. We're in a full-blown recession. We got massive problems. So they're going to look to front run it by monitoring headline inflation. So that's got to start stacking up high. Now, in the event we get a massive surprise headline inflation print, that can get the Fed even closer to pressing that magic button. The more to the upside and wild it is, the closer they are to pressing that actual button. Also, here's the other part. Remember core, which is taking the oil away? In the event core is showing lower inflation, so everything not counting oil is getting lower in prices, the Fed's doing their job, this gives them more elbow room to cut, which they'll do just because they're anticipating this problem from headline. Now, we've been able to use this what's the word I'm looking for? This divergent data to really pinpoint when we're going to get a breakout and when we're just going to get sideways action. Of course, with our durable goods print, which stands for robotic and artificial intelligence, we've been waiting to get a clear bullish breakout to send all of our AI projects running. Let's take a look at Tau, because Tau really shows something hidden deep inside the data. For one, we've got our repeating trend line on Tau. This is a charting system that we use inside our VIP group. We've got videos on how to set it up. The exact same repeating trend lines that we were using in 2023 are repeating now. So we've got videos charting these out back then, and you can just copy paste them and they work now. So as Tau is approaching this repeating trend line, let's add some macroeconomic data. Each one of these green emojis is a labor market print. And what this is showing is just volumes about what's really going on inside the labor market. This is a jobs report. That's on February 6th. That's when the entire market starts consolidating. Right here, February 6th. We get this bullish jobs report. It actually showed a ton of growth. And since then, Bitcoin, all the altcoins, they've been consolidating. Then at the very next labor market print, 30 days later, we finally get a trigger that sends Cow ripping to the upside. What's that trigger? Let me fix the camera battery here. That trigger is a labor market print that's showing super low data. You wonder why it's always 20-year-old kids fresh out of college that are suddenly experts in trading. It's because they have the audio video skills to set this up. You guys have no idea. And trust me, you don't want to get into crypto YouTube. You don't want to get into YouTubing at all. It is insanely complex and takes a huge set of skills that most people my age just don't have. So being a good trader and being a good YouTuber completely contrast themselves. It's almost ridiculous. And that's how we end up getting these Jerry Banfields and the Peach Fuzz Mafia exploding to the upside. It's the labor market print. What it showed was massive downside in the labor market. The narrative is AI is replacing jobs, and this sends Tau absolutely running to the upside. Previous FOMC documents, like the one that we're reading here, where they're talking about, yeah, we will definitely cut rates in the event the Middle East keeps going. We found information that's saying, yes, the AI sector is getting ready to rally to the upside. The AI sector specifically. And that rally, I'm about to correlate this to some projects that are about to break out. Of course, Tau's already ripped, so we want to get the next wave. That rally is going to come from this liquidity restoration when the Treasury General account finally gets refilled. And guess what? The Fed just told us in this paragraph, I think that's page 1, the Treasury General account hasn't refilled yet. Therefore, the AI CapEx hasn't got their big injection of liquidity, but they will in May. So all of these breakouts that we've been patiently waiting for are delayed until May. And it's honestly, we did the best with the information we have. It looks like the United States president and his team of experts had this exact same idea that we had. You guys remember in video after video, we kept saying like this one, April market surprise, huge rally loading, mega catalyst ahead. We just kept explaining in April, there's going to be this big event and it's going to cause an injection of liquidity back into the US economy that will be targeting AI. Now, our original date was April 8th. The president was on board with our prediction clearly. The Fed has now delayed that until late April. We can see right here, late April. That's when it's all going to be done. So this upside is now ready for May. To top it off, the Bank of Japan and all these other banks are going to get ready to hike rates at the end of the month. This is going to pull more liquidity away, giving a good discount opportunity for the institutional investors who know exactly what I'm going to explain to you. Just like we did on the river trade, when we unpacked all the information from the FOMC minutes, Powell ran his mouth at the meetings 2 weeks before, so we knew that it was going to be a stablecoin project. VIP members know we've studied like every stablecoin project. We vetted tons of them, and there's really like 2 finalists. One we came up with earlier, which is still going to do something later in this year. And then River we came out with later and did half a dozen posts for, all based on the FOMC insight. This is our most valuable resource to get trading insight. I mean, it's clearly telling us when they're going to cut rates and what needs to happen in order for that to go down. Remember how we were correlating the oil rate cuts? How they're saying right here, we will cut oil, we will cut rates based on oil. In order for that to happen, we're going to need specific data events to happen. We're going to need the headline versus core PCE and CPI to start stacking up to hit a domino effect. And then that'll trigger bullish reaction. And the institutional money, they're going to front run this. The effects of macro data have been more toned down because we're not in a bull run, but we can see it clearly with Tau. Starts consolidating at a jobs report, breaks out at a jobs report. It's pretty clear cut what's driving the institutional money to the upside. And it's AI, as they get that refill from the TGA, that's got a ton of room to grow. And therefore, the institutional traders will go after that. And then there's also tokenized stocks. And I wanted to take a minute to talk about tokenized stocks, go over 2 of the most popular picks right now. Remember, inside our VIP trading group, we have a very specific selection that's directly correlated to the FOMC minutes. We pull a paragraph right out of it. We didn't get one in the last minutes 45 days ago, but we did get one 90 days ago, and that was River. So this trade, we're feeling highly confident it's going to do well in May when this liquidity injection is over. With that liquidity injection in May, we might get lucky and get the Clarity Act too, guys. How awesome would that be? And just like we kind of proved all of Trump's moves is a giant bread and puppet because he did the same exact thing last year at basically the exact same time. And journalists were saying, oh, these ceasefires are fake, just like they are now. Right before the event happened, all the independent media is talking about nuclear bombs. That's exactly what they were doing last year, talking about nuclear bombs right before the TGA. It's totally wild. Let's get into these tokenized stocks. So there's 2 huge picks that everybody's talking about. The first one is XPL. And here's the kicker here. These are both right around the exact same market cap. All right, let's just look at the chart totally naked at first. The second one is Monad. The use cases here, very similar. The market cap, almost the exact same. There's some huge differences when we vet these projects out, and we don't even have to like read the white paper and start looking, be like, oh, well, their Ethereum sharding program only uses 2.5 nerds at an 8 gigahertz. It's nothing that complex, guys. This is really elementary stuff. A lot of success in crypto is just like success in hand-to-hand fighting. You don't need to get fancy, do a flying kick to the head, stick to the basics, keep your hands up, protect yourself. That's the way to do it. Stick to the basics. Can anybody name some of the basics right away that separate Monad and XPL? Just the simple vetting stuff. Memecoins, I hear you guys talking about Memecoins. Crypto John, I'm one of his biggest fans, right? We're going to get into Memecoins in a second. I want to get past this tokenized stuff because this is important. These are both good projects. I'm not talking down either one. But as we start delving into the wallet distribution, XPL is very top heavy. So once you get below like the first 20 wallets, all of a sudden the holdings like drop off a cliff. It's like 6 figures, $20,000 worth. Monad, way more distributed. Okay. That's simple vetting point number 1. Now we have a 24-point checklist with videos about how to gather the most insight from it, with AI tools. So you can get AI to do the research for you and show you everything you need to get. It's just making sure that you check every point and don't overlook anything important to get the full picture. So 1, Monad's winning in wallets. Number 2, activity on chain. Monad, let's pull up DeFi Llama, is crushing it on chain. They have an entire ecosystem. They have coins on top of this coin already running. Total value locked. Getting some good upside here. Let's look at XPL. Plasma. Okay, look at the total value locked on Plasma. Okay, it's ramping down. Monad actually has less total value locked, but it's moving in an upward direction. Even though we're in a bear market, Plasma total value is going to the downside. Here's a project we had cited in our VIP group. We did one trading plan on it between 12 and 10 cents. Since then, it's doubled up, but we backed off this project and we just keep it on the radar for the tokenized stock section. This project APR, it's actually traded on Coinbase. It's an MEV bot, maximum extracted value. So this bot, this coin that anyone can buy, goes around sandwich trading tokenized stocks on Monad, and I think Ethereum as well. So it runs on Ethereum, maybe it's BNB, and it also runs on Monad. So Monad has this entire ecosystem built around it. It has a more distributed wallet. It has, you could compare the DeFi Llama metrics head to head. Here's another really important point that we don't stress enough on this channel. Look at the technical setup here. XPL, kind of a falling wedge starting to try to curve to the upside. When you see these curved shapes, this is sellers losing control. And once the sellers become exhausted, just like in a cup and handle, there are no more sellers on the books, and then we get a parabolic move to the upside. In May, Monad has this beautiful Adam and Eve pattern. This is the exact same pattern that all of our bullish charts, not all, but most of our bullish charts are showing this exact same pattern. And this is a trend that we've recorded time and time again inside our VIP group. Bullish charts will show the exact same pattern. We can see this. That's an Adam and Eve consolidation reversal. A great example of the exact same pattern on every chart is right here. This huge falling wedge. Render, AVAX, Solana, Bitcoin. Every project formed this falling wedge and then broke out. Why it broke out was because they changed the amount of rate cuts they were going to do. They had a dot plot vote. Now, guys who have been watching the live streams, we were stressing, hey, this is a big deal. This could be super bearish or super bullish because there was just a dot plot vote. Each one of these green emojis shows ones. These are the most high impact catalysts of all times. And since they did the vote and printed the minutes, they totally changed their tune. We saw what the dot plot vote was, but now they're all talking about, oh, rate cuts have gotten pushed back to December. And they're also saying, we'll do one. If this keeps going on in the Middle East, they'll just start cutting rates because of that headline dynamic, headline to core inflation. That falling wedge was on every chart. Right here, they vote. They add 3 rate cuts. Rockets to the upside in 45 days. Up here, remember, they removed rate cuts. Originally, they were planning to have a massive bull run. They're like, oh yeah, we're going to keep cutting rates all throughout Q4, Q1 of 2025. They changed that. Everybody missed it, which in my opinion is criminal negligence for any trader with over $10,000 in the market, especially YouTubers who are coaching people. This is a core market dynamic. So we all have to catch these things. Here, they did a rate cut, but then they backed off on more. And now right here, we're getting this, maybe we're going to add rate cuts depending on inflation. So there's a lot of catalysts coming in the near future. Things can change. The dice are in the air, but we do know April. It was originally just April. That's what even the president and all of his cabinet guys were thinking. That's why they coordinated this whole bread and puppet ceasefire, just like they did last year with Russia. Whenever it's March, March stands for when we're going to war. Whenever it's March and you start hearing about nukes on the news, that's a buy signal, in my opinion. That is going to be paired with Bank of Japan carry trades, Bank of Canada, Bank of Australia, all of them. And then after, when that Treasury General Account liquidity gets injected back in May, the AI CapEx is going to fill in. And in the event we get lucky, they will release the Clarity Act with that incoming liquidity. This will protect the institutional investors who are loading the bag right now. This is their game plan. Americans are paying their taxes. Our pockets are empty. The institutional investors, they're excellent at financial planning. They've got a stash of cash ready. They are loading up. And we might get low core inflation, which removes oil, giving the Fed elbow room to cut rates, but high headline inflation. You see the difference? You see the divergence between those two? This is something that we really stress about our VIP group and looking at these numbers. People watch the show and they think, I got this figured out, Jesse. I don't need to go in VIP. Whenever CPI goes something low, that's when I buy. When it goes high, that's when I wait. I got it. It's way more complex. There's divergent numbers. It's always changing. It's stacking on top of each other. There can be surprise information. This system, I wish I could buy it. If I would have had this when I was trading during COVID lockdowns, it helps you so much. Pinpoint exact market pivots. I got to work with Roaring Kitty with the GameStop trade, and he really tipped me off to a lot of the mechanics of the market. So back to trades. In my opinion, Monad is going to outperform XPL. Just look at the technical analysis. Like, what is XPL going to start doing? Like, it's maybe can do an inverted head and shoulder. It still hasn't formed a breakout catalyst. It's not like it's going to just suddenly rip to the upside. Monad, this is raring to go. Look, it's up. Zooming in, I mean, it's up since the minutes. It's about to break out. And tomorrow with the CPI, the most bullish read we can get is divergent. For core, we want low. Core meaning no oil, no food, because low core means the Fed is working on their COVID money printing inflation. They're chipping away at that. That's going good. Powell likes that. The board likes that. Headline inflation is from Trump's nonsense, the tariffs and the oil. So that can go high, warranting them to cut. So that would be our best setup. In combination with the minutes, we could see a nice rally in select sectors, specifically AI and tokenized stocks. Now for AI, I really think that Clanker is getting ready to shock people. Say is a great project as well right now. I want to show you an example of Clanker's setup across some other charts. So this particular, I believe it's it might be KuCoin there. This gives us a much more full understanding of Clanker's chart, because there was the initial run up, which is so key for what it's forming right now. We get the initial run up in November, right around when virtuals peaked, and we keep stopping out right around 120, we'll call it. When we look at projects specifically with a low float, Clanker has a massively low float. It's got 1 million tokens. Recently, whale wallets have been scooping up Clanker tokens. Wallet 3, Wallet 4, and Wallet 5, they're 30 days old. They bought 20% of the supply 30 days ago. The girls who do live streams about Clanker, they're inside the team. You can find their wallet. It's called like Clanker Girls or something. ETH Girls, cryptogirls.dao. They just bought 100 grand worth of Clanker 15 days ago. It's only a matter of time before this low float meets the X402 narrative with all that pass off from Coinbase's hands, which is ultimately the Farcaster team, and they start launching more bots on Clanker. Moltbook, purchased by Facebook, that's a Clanker bot, guys. That means Clanker's legit. Facebook could launch more Clanker bots. What we're seeing is very similar to Pepe. We get the initial upside, and then we get this 5x volatility consolidation period until a bigger breakout with the bull market. Don't get me wrong, there's a lot of risk. This pattern can fail. It's either the Clanker pattern fails or it's going to do one of these awesome breakouts. Bonk, same thing. You get this initial spike. And these are both projects that really worked on creating a low supply. These rocket ship upsides, dog with hat. This is about a year consolidation, and then you get the breakout. The teams worked specifically on cutting into the supply, which is exactly what Clanker's doing. And it appears that there's a lot of whales in the knowledge that are buying it. As the AI agent economy booms, in my opinion, this is our best chance to capture the next virtuals. I see a comment about Crypto John. I've got to jump to this. I was listening to Crypto John talk about Turbo going to $1 a couple years ago. I put 5K in it now, worth 200. Subscriber count, view count have almost zero correlation with the success of that content creator. In fact, creating a successful YouTuber, habits, patterns, and being a successful trader often completely do not correlate. They're two different traits. The amount of time it takes to be a successful trader, to go through all the necessary information, just stay on top of the central bank. And then you've got to go over hundreds of projects, enormous amount of time. How are you going to then create a successful YouTube channel? Crypto John is the perfect example of somebody who is virally successful on YouTube and has almost no skills trading whatsoever. Everybody can be conned into someone's skill set when they're new into crypto. I was in Crypto John's VIP group. So I'm in with the GameStop trade. I'm a day trader. I understand the stock market like the back of my hand. I've made plenty of gains. We got in on Nvidia at the low, sold that too early. Got Marathon for the breakout when Elon Musk bought Bitcoin. The GameStop trade, Palantir. buying Palantir, actually bought it at the peak of 2021, 2022, held it through the downside, and then finally captured the breakout. With more understanding now, we would have waited for the low and just stacked in, because it's all correlated to the Fed data. As soon as you see somebody that understands how the wallets work, how the chains work, it's such a learning curve. You immediately think a guy like Crypto John is an expert. They've just been around the woods for a while. Their ability to trade successfully isn't correlated. So we can see PLTR, right? Here's all the Fed's money printing, and then it comes down. Boom. We can actually add that right onto the chart. Here's all the Fed's money printing, and then they do quantitative easing, quantitative tightening. This is when crypto crashed dramatically. And then right around here, they stop the quantitative tightening. They stop the rate hikes. They start to flatten it out, start to move towards neutral, and PLTR just rips to the upside. I'd like to start trading Coinbase this summer once things flips bullishly. I think that'll be a great addition, because Coinbase has almost the exact same catalyst, almost moves in a mirrored dynamic with Caspa. Caspa did a 10x from the summer of 2023 when we bought it. Coinbase did an 8x. Look at all these FOMC meetings. Actually, there's a better illustration here. This one. This shows each green emoji is an FOMC meeting when Caspa ripped to the upside. Look at Coinbase. Rips, rips up, jumps, jumps. Therefore, we can look for openings to trade options, which are very time sensitive on Coinbase stock, which for US citizens is great. Yes, congratulations. Congratulations. Some meme coins that I like right now, guys, because there are cool meme coins. We did do a trading plan for Pepe inside of the group just for the guys that like it. I don't trade meme coins personally. I do trade AI agents, because what we've proven historically, when these rate cut happens, when it finally goes down, we're able to outperform all the meme coins. We always end up capturing the best breakouts when we get a catalyst like River, BankerBot. And this is just in Q1 in a bear market. Back when they were cutting rates, when things were going good, we're catching all the good trades using utility plays because we just have all this insight from the Fed. Crypto is so connected to this liquidity, and this is something that's teachable. When it gets into technical analysis and you start watching a grandmaster like Gareth Soloway, you can pick up some tips from that guy, but some of that stuff just isn't teachable. He's just got it so embedded in his head. This macroeconomic stuff, I mean, the writing's on the wall, guys, right? They will cut rates from the Middle East conflict in the event there's a correlation between headline inflation and core inflation. That's the trigger. That's what'll make it rock. Yeah. Translation, this is a very sector-specific altcoin season. And I would like to rephrase your statement. Please, it's all about the style that we're using. It has nothing to do with me. It's all about macro hybrid. When you're getting into personalized trading picks or personalized callouts, that's something that isn't teachable. This stuff's all like actually written down in these documents. We're just translating it and then correlating into crypto. Like the River trade, they're saying we're going to start buying treasury bills, a ton of them, to fix the liquidity crisis from the government shutdown. When we go into just on crypto rank, what does it say about River? It's a stablecoin DeFi project that uses treasury bills, right? So that whole flywheel effect, see this? River is a cross-chain stablecoin protocol. It might not say it on the front page, but the understanding we all realize because of the Genius Act, the only way they can distribute this yield is because they have treasury bills, which are paying a yield. So they're taking it from the US government, from the Fed, from the balance sheet, holding it, collecting the yield, and then passing it through, passing it on to the governance holders. And there's a whole flywheel effect incorporated with that. So obviously there's going to be upside there. Tau, right? There was all these headlines about, well, AI's taken over all the jobs. Remember that? So we get the consolidation at this labor market report. We get up to that. That's a very clear repeating trend line. You don't have to be a master of technical analysis to see, hey, something's going on with, let's get rid of these emojis. This trend line just keeps repeating over and over again. So we have videos inside our VIP group explaining how to trade these. This is how we set up the Caspa short at the September rate cut. Oftentimes, when we're getting away from this massive trend line, it's got this gravity to it, right? It just pulls the price action alongside it. We'll break out, come back, and then bounce off the top side. And then we can see here, there's like a confirmation right here, confirmation of separation away from that trend line. Now it's ready for massive upside. Here, and of course, we got to really line those up properly, zooming into what just took place. We get up to that trend line. We're held back from it. There's resistance. And then we start bucking up. We're retesting the all-time high of this bullish movement. And then we come back. We get a bounce off the top side. Now, look at this. Sideways consolidation. The farther away from its gravitational field we get, the more we moved along their angled Fibonacci pitch, the closer it is to its breakout signal. And that all happened at labor market reports. The consolidation, February 6th, the breakout, March 6th. That was a Friday print, so it waited till Monday to get the move, which is a complex dynamic that very well can be happening this weekend. It all depends. Hey, are we going to get the right CPI inflation? And it's not just low or high. We want a divergent print for maximum effect. The Fed's going to be defeating their COVID money printing error, showing low core inflation. Meanwhile, with the conflict in the Middle East, oh, that's wrecking inflation. That's driving prices through the roof. So we want one low, one high. That's the most bullish outcome. Over the weekend, and then Monday, it's actually Sunday at 3 p.m. Vegas time, they reopen the market, and that's a big trading moment. Some of our best trades, we got entry right there. This one looks pretty insane, but it was awesome, and it happened just recently. IP story. So we were able to correlate this with MSCI regulation, seeing it was getting upside, retesting this all-time high. That's Sunday at 3 p.m. And this, we got a lot of bullish prints here. I think it was labor and inflation. So we were anticipating a breakout inside group based on the macro data. And we're just trying to figure out, okay, what's really going to run? And pretty much any pick you would have got could have done 8% to 32, but we want to catch that one that's got some oomph to it. And we thought about it and we vetted through, we talked about it all weekend. I did tons of research for the guys. And then we finally, an hour before 3 o'clock, we're like, it's this one. It's definitely this one. And it doubled up. So this is a skill set that's teachable. Doesn't take a artistic outlook with the candles, although the candles are a part of it. Candles show psychology. Kev, that's the question of the day. That's something we've also been talking about inside of VIP group. So since you asked such a good question, you're going to get an awesome answer dabbing into the book report I just did on this FOMC minutes for all the guys. Of course, I'm not going to show it to you. It's behind the paywall. So the big trigger here was RMP liquidity. There's a link to the FOMC minutes if you want to try to answer that question on your own. The answer's in this document. I'll give it to you. So here they're getting ready to jack it up. They're going from 0 to 90 in 3 seconds. Big token unlock here. What they just said was that they're going to start tapering off. So it's not going to be super bearish like they just stopped, but they're going to start tapering off at the end of April. So here's something about RPMs. It just happened to be on this page. Let's read it. The manager noted that after April, the monthly pace of RPMs, and RPMs are what's going to drive River. That presses go on the River flywheel. They'll be reduced significantly in a gradual way, but they are on deck to do more. So River will be chilling. It definitely will have its day. So if you're stuck in a position with River in VIP, we did talk about the token unlock and take profit. It's not like it's going to just flatline. It'll rally back up. This is something that you got to use some patience on. Inside the university that I'm putting together, I want to work a lot on the psychological aspect. People like Crypto John build their entire community around that. And I'll give him this. There is a lot of psychological benefit to having a bunch of people around you that are trading crypto. I can give you a real example. Moving into this tower was extremely good because you're in an environment filled with people that are operating on the right frequency. Not to get too metaphysical, we all live in a hologram, but I'm hanging out with guys that built the first Bitcoin ASIC, run an exchange overseas, do computer coding for a living. This guy lives in our building. He wrote this book, Vibe Coding Patterns. He was one of the first guys to use vibe coding before anybody heard of it. He was doing Claude before anybody knew how good Claude was. He got a job offer from Phantom. So he's pulling big 6 figures to live here. Everyone's a millionaire here. It's awesome. You're in Podunk, Nebraska, or Vermont, where I'm from. You're just not going to be able to find people that are interested. They're so not on your frequency, man. So communities like Crypto John, they still have some upside, even though I don't think he has any idea what he's doing. Yeah, patience. Back to my point here with your question. Patience, man. Just be patient. The biggest tool that the institutional investors use against us and for themselves is patience. The first concept of investing, compound interest. Kings have lost entire kingdoms betting 2 grains of wheat. If you multiply 2 grains of wheat and double it on every chessboard, by the time you get to the end of the chessboard, it's like 37 gazillion. It's an enormous number. Compound interest. With crypto investing, when it's done correctly, we're using a more high impact compound investing structure. You are going to miss some tops. Hold it out. Make sure you invest in projects that you're not going to get rugged in like Turbo. That could be a rug. It gets more complex when you're going for projects like Virtuals, which might not have a huge season ahead, or ICP, for example. They had a great run, might not really have huge earnings in the meantime. because we're waiting for the Fed to continue printing money. Inflation is never supposed to be at zero. The reason the goal is 2% is because that's to go along with the growth of the economy. As we understand how economics and central banking works, they're always printing this money and then taking it away in a 4-year cycle, which is why Satoshi built Bitcoin with a 4-year halving to capture that concept. It's to steadily grow the GDP and grow America and the world at like a 2% ratio. So inflation's always headed to the upside. Using time on our side to get that compound interest effect is so key. And this last cycle was terrible. But in 2030, it'll be even better. So patience. Always use patience. Great question. We've got the TGA refill and the Bank of Japan carry trade. Let's see how high impact the Bank of Japan carry trade was on Tau in the previous cycle. That was on, I want to say, August of 2024. Yeah, that was pretty bearish. Oh, it's right here. Okay. We can actually zoom in on this. All right. So it was around, we'll say, August 1st. Yeah. So here's the Bank of Japan carry trade, the first one. We saw Tau go from 350, wicked really low, wicked all the way to 175. And then the next Bank of Japan carry trade, which we de-risked and sold our portfolio, was January 28th. So right here. And then on this one, it went from 500 and it wicked all the way down to 240. So here we are at 340. I can show you where there's some support and resistance macroeconomically connected to give you an idea on when you're getting a really good deal. What we put on the chart is PPI inflation. This has been the most bearish catalyst. They had these surprise come out of nowhere, and they've been crashing the market. There was one on the 14th, another one here. So this is a strong resistance. We want to break through that and get you to here. This is the January 30th for Bitcoin. That's 84K. And this is a target for the May rally too, getting to that January 30th day on the total 3 on Bitcoin. If you can get anywhere near 240, that's the best you're going to get, even on a wick. So wait, listen for the Bank of Japan rate hike. Wait, not based on my opinion, because I'm showing you this in the FOMC minutes. Late April, they're doing the Treasury General Account refill. And I don't have it open right now, but I can pull you up a document directly explaining Treasury General Account reserves hit a low on September 15th. Looking at that date, that's right here. September, let's do it on the 3-hour chart. And there's a clear trout. So right here, boom, they hit a reserve and we got this double top. Here's where the minutes were released. Inside our VIP group, we picked up, hey guys, reserves are at a super low. There's going to be some downside. And then they added the Morgan Stanley regulation, and it really just crashed out the altcoin market. This tool right here, showing all the FOMC minutes, you can get, just type in FOMC meetings to the indicator, or you can type Jesse AI, either way, and it will bring this up just to show you on any chart how high impact these events are and can be. Word up. Long time, man. Long time. Going back, having gone to in Vegas, they have these huge meetings inside of conference rooms. You're always kind of timid to join one of these groups because you don't know if the information is going to be worth it. I know that this information has such value, can help you not only understand the market, but translate into actionable trades, big picture, near term, everything. Just really open your market understanding, and I price it super fair. It's $47, and you get a ton of insight. Learn as you go. And we're going to build a higher ticket university item where I'm just going to walk everyone through everything, include psychology and money management. Holding cash is like shorting, and we're not always bullish. One of the most underestimated tactics is hold cash. Based on this green emoji, we got ready to sell at this orange emoji in our VIP group right after that huge rally with plans to wait for 120 days. Because we rotated into cash, having that cash while everyone was crying is like the greatest feeling. You're like, yes. And that's when you make the most money. So we're going to have this whole course to go on top of the VIP group as well. Caspa, yes. And Caspa's really we got a lot of time to build up on Caspa. Same with Say. Same with a lot of projects that aren't in these sector-specific rallies. Caspa had its time. It had its specific catalysts, its specific market environment to induce bullish upside. That being the Fed building their balance sheet. They did that 30-day emergency quantitative easing. Back here, Caspa became the #1 performing. And then with these leveraged monetary into the Bank of Japan carry trade, right? That money then leveraged through the Bank of Japan, making Caspa continue to run to the upside until that top. Caspa as a store of value really connected with the balance sheet. So once the Fed's ready to finally start unlocking its balance sheet, that's when we start seeing Bitcoin 300K, and that's what's going to really move Caspa. This gives the team and the KII a lot of time to build. And I'm super excited to hear that some development groups are exploring artificial intelligence, like IGRA. They're one of the biggest developers on Caspa. They're not the team. They're just building on it like the KII. After the hard fork, which was originally scheduled for May, all these on-chain upgrades are going to work parallel with macroeconomic conditions. Do you think it's a coincidence that the president orchestrated this bread and pupper on April 8th? And a lowly YouTuber, had the exact same insight in all these videos. We are saying the exact date, April 8th, right? Because based on all the information we had, it was going to be April 8th. And that's, of course, when all these ceasefires were happening last year. Caspa's team has plenty of time to build a killer app on chain. Because right now it's just great technology. It's an awesome network. That translates into a store of value correlated with the balance sheet. But to really get that explosive growth, they need to have an awesome app. And that can come from AI. That can come from the KII. We'll have to see. Yes, because there's going to be high volatility, and there's going to be a bear trap. It's an absolute monster bear trap. I'm going to show you in the FOMC minutes. This is how you set a bear trap, according to Jerome Powell. Reserves will hit their trout in late April. We've already shown other examples of how that correlates to downside in altcoins. So when reserves are down, altcoins are down. All the other central banks are going to hike rates, but they are originally going to cut. And that's all happening at the end of April, right around April 28th, week of. So the Fed has set a bear trap. People are going to short the bottom, and then it's going to explode to the upside. There's a great probability. Look at that beautiful FOMC meeting right there. Rockets to the upside. We get a release of the Clarity Act. So the reason why the altcoins bounced so hard on April 8th, the reason why the president set up his bread and puppet for April 8th, the reason why we started doing all these live streams telling everybody about April 8th is because the Treasury General account, decentralized from the US government, in the hands of Jerome Powell, was going to push the liquidity into Scott Bessant's hands, and then he's going to dump it into the market. But that hasn't happened yet. It's going to be late April. So huge bear trap. To elaborate more would include opening up other FOMC documents. As I've mentioned and do in every video, all of our trading thesis has nothing to do with my opinion. That's why I disapprove when people are like, nice call out, Jesse, or this and that. It's this system. It's the FOMC data. It's super teachable. It's actually written on the wall. What we have to do, our skill set, is interpreting it and then transferring it over into the crypto market. Jonathan spoke at Oxford University a day ago, checking out, not openly about CASPA, but basically explaining what CASPA solves, and pretty interesting. Yeah, he gives a lecture about different concepts in society. I watched it. It's an interesting talk, but doesn't really talk about CASPA or the market at all. Yes. And the future is in our hands. Remember, CASPA is a highly advanced, basically, internet. It's up to the developers to build on it. And I wanted to add something to Egra Labs, which I did a video about how they're really getting ready to use CASPA for AI and AI agents. There's tons of devs that are building on CASPA, like this guy. Currently unemployed at CASPA, building AI. For CASPA community, I'm going to give it to you guys straight. We've got plenty of time to load the bags. And that's not my opinion. This is in the Fed document. For one, they're pushing rate cuts out until December unless this oil Middle East conflict forces them to do it sooner. Once Powell gets out and this new guy gets in, it's going to be a huge pivot as well. So some of this we want to take with a grain of salt because it's going to change. But it's important to stay up to date and see how they move and why, particularly that divergent and headline to core inflation data. We're going to have plenty of time. The 12% May 15th target, that massive trend line that we can see on every crypto, the May 15th resistance, this is it on Tau. It's on CASPA right here. Of course, we were able to sell our bag at the top. It's another great benefit of joining this VIP group. You've got somebody who understands the layout of this land. We've been seeing where the herd of caribou are traveling. We've already got the whole thing staked out. We know you're an expert hunter. You're a crack shot with your rifle. You can find scat and figure out what they've been eating the week before. But with that, you've got to put in 2 weeks of work before you can even understand where they are and where they're moving in order to catch them. That's what we do in our VIP group. We're kind of guiding you through. We never know when something's going to take us on by surprise, like this sudden May 15th surprise speech, which we captured. And it was a tradable event that later became a huge milestone in the market. And I remember specifically group members were like, yeah, me, Kevin went bullish on that. And he was the only other guy that found it. Yes, the magic trend lines are pretty epic too. The repeating trend line system, while having a discussion with a member of the KII, an ongoing interview, we'll call it, they told me one of the CASPA team members joined our VIP group just to check out the repeating trend line system. I believe they wanted to see if they could find where in the code, where in the hash rate this comes from. And we can see this on any crypto. Gareth Soloway, master technical analyst, he's now using repeating trend lines in his Bitcoin charts. Previously, people kind of poked fun at the idea. Now that Gareth Soloway is doing it, it's kind of become a mainstream idea. And it's across all the cryptos. TAL. In the university that we're putting together, because we have a trading journal collecting all this information, what macro events are correlated with what patterns. So when you see a cup and handle, this will often break out at a labor market print or a policy adjustment, correlating more of our insight from the FOMC and central bank information to our technical analysis, making the hybrid strategy stronger, which we can do because we've been recording this trading method for 2 years. Like on TAL, for example, labor market consolidation and then labor market breakout, 30 days apart. Boom, boom. That's an Adam and Eve. That's a consolidation and reversal pattern, so on and so forth. Best case scenario, the next leg up is going to come with that Clarity Act regulation, guys. Just like the president was basically in our group talking about April 8th, right? Like imagine Trump's in our VIP group. All right. We go over all the central bank document, like in all these videos, we keep saying April 8th, April 8th. What's he going to do? What he did. Right? Trump's like, oh, I got you guys. We'll wait for the central bank April 8th TGA event and I'll just do this bread and puppet show on the news. Just like that, with this May upside, Nancy Pelosi and her gang of merry men, they'll probably drop the Clarity Act. That's my next crystal ball call out. It's pretty much on consolidation right now. DCA. I would say DCA. In the event it's going to break out, Monday will be the day. Let's pull up the macroeconomic calendar just to make sure we see everything that's coming on the horizon. Okay. Can you guys see that? So we've got the durable goods, which actually came out kind of bearish. That was a big letdown. And we could see on Clanker, for any of you guys that were trading it, remember, like right when the durable goods print came out, it like so badly wanted to run. It started kind of reversing. It was like, oh man, I wish we had better data. It looked like it was ready to go, but it just didn't have the macroeconomics that it needed to break out. We got the minutes, which is kind of neutral. Then we've got PCE. It wasn't a true PCE reading. We got CPI, and then we've got PPI. Then we've got another durable goods. Then we've got the Bank of Japan and the TGA. CPI, which will start, I would be watching Sunday at 3. What you want to see for tomorrow's CPI print, the most bullish possibility is divergent. So for core, which shows how the Fed's been doing with their COVID and 2021 money printing, you want to see that number come down because that gives them more elbow room to print. And at the same time, you want to see headline, which includes oil, go up. So you want to see divergent, core down, meaning that they're defeating inflation from COVID, and you want to see headline up. And this is all not my opinion on the understanding. This is all written in the documents, guys. Remember, everything I say to you, I'm going to be able to validate with one of these clips. Like, hey, we will cut rates. We'll do it. We'll do additional rate cuts. If conflicts in the Middle East, push headline up while core goes down, giving them more room. So watch for that print tomorrow morning. That's going to be when the stock market reopens. And remember, inside that minutes, we got a hot pick. The central bank is talking about a specific sector that's trending bullish right now. It's got a great looking chart. It's ready to break out. That's a VIP pick. We'll be talking about it after the upside in May. It's ready to outperform. So Clanker, between Friday and Sunday when the DXY reopens Monday, it's got to get above 30 to really start cooking. Yeah, you could wait. Wait until April. But it should hold this range. This got a lot of support right at this range right here, right around 25. Looking at the tokenomics, the team members just bought 14 days ago. I'll zoom in on this. This is Crypto Girls. They do Farcaster YouTube content. They just bought 2 weeks ago, 100K worth. Wallets 3, Wallets 4, and Wallets 5 bought $5 million worth 30 days ago. So it looks like the whales think now's a pretty good time to buy. This is a project at 30 million market cap with only 1 million float that as retail, we can actually rally up the troops and get this going. Wow, look at Monad. Remember, I broke down earlier in this video, Monad, in my opinion, better than XPL. Look at this. Of course, we've got trading plans from this weekend before the minutes came out. The reason why we said, hey, guys, Monad last call this weekend here on 28 is because this project on our radar, this runs on Monad. It's an MEV bot. Right? We did do a trading plan for this between 10 and 12 cents. Doubled up since we got it, but we didn't do a lot of trading plans because the wallets are kind of too top heavy. So we don't want to get our group members in that. There's too much risk. But this just shows us clearly, yo, this is the Monad ecosystem. This one runs on Monad. So see, this broke out first. This is already running on Friday, Saturday, Sunday. It already jolted up. See this big wick up? This is like Tuesday, Wednesday. This is Sunday. See that? So we got like a 24, 48-hour head start. And in our Monad trading plan, like, yo, last call, obviously, this is part of our insight. Something we had on the radar. I own Clanker. Remember, there's risk with these patterns. This is exactly like we're getting with Pepe. This is exactly what we're getting with Dog with Hat. Those are all meme coins where what did the team concentrate on? Cutting the supply down. They wanted to restrict the supply so that buying pressure caused a massive rocket. And they had about a year's worth of choppy consolidation. Pepe, dog with hat. A few other ones. Clanker showing the exact same routine. Jesse, when the actual bull run starts to ramp up, do you have a strategy to help time the top? Yes. Of course we do. Of course we do. I'll give it to you right now, and then we're going to wrap this up. To see this across any chart, just type FOMC meetings in the indicators on TradingView. You'll get this indicator. This is showing each FOMC meeting on CASPA. This was exactly what caused all the breakouts. Same thing on Coinbase. See this? These green emojis. This is where we bought it. This is where they did quantitative easing because there was a banking sector crisis. So the Fed had to buy a ton of long-term bonds. Since then, they got smart. They're buying treasury bills now, which are short-term bonds, because they saw how it impacted the market. And the Fed's also doing a massive pivot here. Originally, they're hiking rates. They're doing huge quantitative tightening, all because of the COVID printing. Right here on November 10th, 2021, the Fed has an FOMC meeting. At the time, they're doing full-blown quantitative easing. That means the Fed is actively buying long-term bonds and giving cash to BlackRock and friends. That cash needs to be protected from inflation and therefore rolls into the economy. This is all of trading 101. Whether we're looking at PLTR, Tesla, Bitcoin, CASPA, it's all correlated to that concept. When is the central bank injecting liquidity through the bond market, and when are they taking it out? One of the biggest misconceptions, one of the biggest Jerry Banfield talking points is the M2. By the time it's on the M2, it's already late. You're never going to get any insight off the M2 except for kind of what already happened. You can't trade it. Bond market and the policy surrounding the bond market is super important. The highest impact event is quantitative easing or quantitative tightening. The second is the rate cut. Well, I thought rate cuts were the most. No. When they lower or raise the rates, that's just incentivizing money to move in or out of the bond market. They hike the rates, they're going to pay BlackRock more, incentivizing putting money into bonds, taking it out of the economy to fight inflation. Once the job market and GDP is threatened, they lower rates to incentivize money getting out of bonds and into the economy to create jobs and GDP. They've been doing this since 1960s. They have a 4-year game plan of doing that. Fighting inflation by taking it out, building jobs and GDP by putting it in. Satoshi knew that. When he designed Bitcoin, that's exactly why he built the halving cycle every 4 years. Here's a chart. This isn't a Bitcoin chart going back to 1970s. This 4-year cycle is the central bank cycle. Satoshi's genius is he hooked in this technological internet age financial tool to this cycle with the halving to absorb their money printing. Crypto is extremely sensitive to liquidity because of that design. any policy adjustments, anything. Right here at the last cycle, they say, okay, no more quantitative easing, no more rate cuts. Now it's rate hikes, and now it's quantitative easing. The difference between cuts and easing is directly forcing it. It's just they're actualizing the pivot from cash into bonds. It's way more of a powerful catalyst than just suggesting it through cuts or hikes, although they're both fairly equal. So right here at that meeting, it's a huge pivot point right there. The bull market is over. November 10th, cash out on any project. Of course, once it starts dipping, Crypto John is buying. And he will not listen to reason because he doesn't understand. It's as clear as day once you get it. So around here, we get this flat line, right? Around here, the Fed is more and more backing off quantitative tightening. They're slowing it down. Instead of taking 3 or 4 fistfuls of cash out of the economy every month, they're taking one, half of one, a couple bucks. They're slowing down the QT, and then they're slowing down the rate hikes. They get to a parallel level. Right around here, right around these final meetings, I start uploading. They do their final rate hike right here. So we get a final round of shorting, and we specifically shorted everything that John was longing, just to show that he's a chump. We only had like 10 subscribers back then, but we're like, this guy's got to go down. He's terrible. So we shorted everything John longed right here because the Fed hiked rates the last time. And then here they're like, okay, all that bearish stuff we started doing since November, all the hikes, all the quantitative tightening, it's over. We're cool where we are right now. We're just going to hold the ground. And that alone, huge pivot. Huge pivot for altcoins, which are very liquidity sensitive. Here's the reason why they stopped right now. They would have kept going, but there was a banking sector crisis. Some of the banks were afraid there was going to be a bank run. And that same reserve liquidity that they're talking about inside the minutes, this was running at super low levels because their policy was so tight. The banks just didn't have cash. It was specifically Circle Bank and another regional bank in California. And that's like a warning sign. That's like the canary in the coal mine. And they're like, whoa, instead of doing all that really bearish stuff, they did 60 days of quantitative easing. And then they said, and that's it. We got to stop or we're going to break the whole system. The canary already died. So that was the huge turning point. Then we get this upside. Here's what happens right here that consolidated all of the altcoins. Caspa was the anomaly that kept it running because they ended up leveraging that capital into the Bank of Japan. That's the hypothesis. So we're adding our PCE data showing the inflation was just getting way too high. It was just getting out of control. I don't even have my PCE marker up, but it was right here. So they're getting high inflation here, and the Fed's like, inflation's running high because originally in these dot plots, they've got plans, hey, we can do rate cuts in the future. Just talking about it is enough. Whenever they vote on the dot plot, that's a big move. So back here, they're saying, you know, we can get some rate cuts in later on. Here they say inflation is too high. Those rate cuts we were planning, they're getting pushed back. In fact, they started setting their inflation target. They said it's going to take until 2027 to reach our 2% goal. And this got partnered with CZ going to trial, Gary Gensler. So paired with high inflation and this dot plot activity, very similar to just recently, there was a dot plot adjustment and a Morgan Stanley thing. The MSCI regulation, very similar setup here, not as drastic, just high inflation consolidation. We get the Bank of Japan trade here. They vote on the dots again. They say, guess what? all of our work fighting inflation, holding our policies at this pretty high level, it all worked. We're going to get ready to ease more liquidity into the market. This is Satoshi's design, guys. So right here, they added 3 rate cuts. Super bullish. Now it's on like Donkey Kong. In our VIP group, we're getting ready to go long on everything except for Kaspa, because we understand Kaspa was able to run in high inflation, and because of the Bank of Japan carry trade, we realized why. And now the liquidity for Kaspa is actually bearish. It's an anomaly coin. But anyway, big picture, it's bullish. Everything's going to go. We're leverage trading. We're ready. Boom. Breakout really happens when they add that last meeting. They do the rate cut and it rockets. Gets back up to here. There's going to be a PCE inflation right at the tip top. So the best way to time the tip top, and this is something I'm going to include in the university, you want to get an emoji for PCE, which mine isn't on the screen right now for some reason. PCE inflation. That's one of the biggest showstoppers, particularly on SAY. SAY is a great example of how PCE inflation, you can go ahead and do these yourself. Just ask ChatGPT, show me all the PCE inflations prints of 2023 to now and make a pine code for me. You can get this. Back on track here. They vote again. Now, they're like, okay, we were originally planning on doing a bunch of rate cuts right here. Everybody on social media was insanely bullish back then. They're thinking, this is it. We're going to get the bull run we've been waiting for. Right? Here's the video I did for everybody. Everybody was waiting for all these young guys. Archie's good. We're not including Archie in the Peach Fuzz Mafia anymore. He's been doing a lot of work in his Fed trading, so he's cool. He's learned his lessons. He's advanced a lot. Anyway, right here, they canceled the bull run, and they did it in writing like we were just looking. So originally, they had 3-4 rate cuts right in Q1 of 2025, and then way more to come, plus quantitative easing. They canceled everything. You want to know why? It said right in the document, and we've pulled this minutes up before. It says, because Trump won the election, he's going to do tariffs. Tariffs are going to raise inflation. So we're changing our whole policy. They just like went right after Trump. So in our VIP trading group, we put together, sell everything, wait 120 days at the Bank of Japan hike. Here, they did one rate cut, but they also removed a ton of rate cuts that were planned to keep us going. And then the Morgan Stanley regulation came in. When this bull run unfolds, and you got plenty of time, man, to learn this stuff, to learn how to time the top. The big all-time top that comes in 2030, it'll be clear because they'll be doing that pivot with policy. They'll say, hey, no more quantitative easing, no more rate cuts. We're going to go in the other direction. When they actually finally get a true blue bull run, which remember, we didn't have because during all of 2024 rally, they weren't even doing quantitative easing. They were just doing a little bit of quantitative tightening or none at all. So it was like the lamest bull run ever. Roaring Kitty taught me that. I'm teaching it to you. Roaring Kitty from GameStop. I was in his VIP group. I paid for one-on-one access. It was way more expensive than it is to talk to me. And he taught me what I'm teaching you. And the details and the nuance of it goes deep. And then, of course, we can correlate this into individual trades on that IP swing trade. What do you think marked the top of that based off what I just explained? PCE, right? Well, it was inflation. It just wasn't PCE. It was PCE. Excuse me. It was PPI. We should get this on the one-day chart. Oh, yeah, there it is. Okay. So on the one-day chart, boom, right there. You see that? That's the January 14th PCE right on the top candle. So we got in this trade. Remember I explained this trade? Sunday DXY, there was all these bullish prints here. And then boom, high inflation. High inflation is always the stopper. It can be jobs, but it's like PCE or PPI recently. Those are the show-stopping prints. So in these rallies we're in right now, it's that. Looking to Tau, when we really zoom in, there's all the support and resistance is based on those PPI metrics. And this is what our VIP trading group really teaches people. Look at this. So that's a PPI print. I'm not going to bring up my Pine code because it gets all messy if you're not on the one day. That is one and that is one. Okay? PPI prints. What I'm building right now on top of our awesome VIP group with the best call outs and the most actionable information you can possibly learn in crypto, I'm going a step farther because we have this giant trading journal merging the technical analysis and the macro insight together even more, answering your question in a full course with all trading journal callouts. None of it's back tested, real actionable insight. Like in our VIP group, these lines were already up before they were resistance and support because we know this method. This is extremely teachable, the absolute most effective way to learn crypto. And I'm going to be completely honest with you guys. There is no way in the flames of hell we would be able to do this without an Ivy League education in economics or artificial intelligence. Just using ChatGPT on your own, there's a link to the FOMC minutes right there. See how much you can extract on your own. It takes a ton of skill to then use the AI to then break down and digest what the Fed is giving out, because this document, this isn't a 12th grade, this is an 8th grade reading. It's not 12th grade reading. This is like, you have to have a master's degree in banking to understand this gobbledygook that they're spitting out. In VIP, we've got the full translation. We've also got all the talking points for members that are already in here, or if you guys want to jump in, inside the printouts, we've got every talking point that you can cut, copy, paste. FOMC minute keyword search. So you just hit Control G and look for those, help you start to learn how to do it on your own. And remember, we've correlated this document that just came out to a specific trade, just like we did with River. So we'll be showing everyone how well that did in May. Thanks for checking out this video, guys. If you want to jump into the VIP, it's only $47. You're investing in yourself. You're getting a community of people around you, making the initiative to connect with people on your frequency. Not just involved in crypto, but decoding Satoshi's secret message. How to use our central bank insight to beat the blockchain. And even the Caspa devs have jumped into our VIP to check out our repeating trendline system, which they thought is pretty amazing. We've got the repeating trend lines, the May 15th date, and all the macro insight. So tomorrow's print, guys, what we want to see is divergence. Remember, it's not as easy as inflation low, inflation high. You got to correlate it to the specific macroeconomic environment. And remember, it's not based on my opinion. The reason we're looking for divergent data is because of what we extracted from the minutes, guys. Okay, there is a right and wrong answer to investing. There's a lot of people who are like, it's an opinion, it's a probability. There's a probability you can mess it up, but the answers, in my opinion, are written on the wall. Thanks for checking this one out, guys. We'll catch you on the next one.